But you hit the nail on the head when you asked me the question. You said, is the United States an insolvent country? Insolvent nations tend to have a very bad relationship with a currency and a very bad relationship with gold. Gold is the true revealer of how well a nation is doing with its stability. And we're doing a very poor job of it. So I expect gold. Listen, if you ask me if Bitcoin, which is a 64 bit private key, which has letters and numbers in it that exists virtually, uh, if that could be $60,000 a unit, then gold could be $5,000 or $6,000 an ounce.
MichaelPento, an economist and president of Pento Portfolio Strategies, specializes in risk management and wealth preservation. He argues that the United States is on the brink of insolvency, as evidenced by its poor management of currency and gold. Pento predicts that gold's value, as a gauge of national stability, could rise to $5,000 or $6,000 an ounce, especially considering Bitcoin's high valuation. Robert Kiyosaki, a renowned author and investor known for his contrarian views, forecasts that gold prices will reach $3,700 in 2024 and $5,000 in 2025. Kiyosaki warns of a looming major crash and possible depression, suggesting that the Fed will print billions in what he describes as fake money. He envisions gold at $5,000, silver at $500, and Bitcoin at $500,000 by 2025. This prediction is based on the anticipated collapse in trust in the US dollar, positioning gold and silver as God's money and Bitcoin as the people's currency. Pento further explains that gold's performance varies with economic conditions. During reflation, when interest rates and economic activity are high, gold typically underperforms. However, due to falling interest rates, it excels in deflationary or disinflationary periods. Gold is widely acknowledged as a traditional haven, used by investors for diversification and hedging during economic slowdowns, financial market turmoil, increased geopolitical risks, and high-risk aversion. Given this understanding, new measures are being used to forecast gold return volatility. Before we dive into this video, please like and subscribe to our channel to stay updated with our latest content. Don't forget to leave a comment with your thoughts. Hit the bell icon to get notified about new uploads.
What always drives gold is falling nominal and real interest rates. That's what gold is most concerned of. And you see that the rates are falling. Rates have crashed. The long-term rates have crashed. So gold actually absolutely loves that. I think the next leg is a recession. That'll take rates a little bit lower on the long end, a lot lower on the short end, because I think the Fed funds rate could go to 2%. Right now, the 2-year note is over 4%. So that's wonderful. But you hit the nail on the head when you asked me the question. You said, is the United States an insolvent country? Insolvent nations tend to have a very bad relationship with a currency and a very bad relationship with gold. Gold is the true revealer of how well a nation is doing with its stability. And we're doing a very poor job of it. So I expect gold. Listen, if you ask me if Bitcoin, which is a 64 bit private key, which has letters and numbers in it that exists virtually, if that could be $60,000 a unit, then gold could be $5,000 or $6,000 an ounce. You need to know where we are in terms of inflation, and especially in the context of inflation, in the context of growth, and then in those 5 sectors between, so it's deflation, disinflation, stasis, reflation, and stagflation, or hyperinflation. And then you'll know every single investment bucket has its own investment style. Sometimes it's wonderful for gold, and sometimes it's horrible. Gold hates reflation because rates are rising and the economy is doing well. In sector 4, you can get killed, but in sector 2 and in 1, you can make a lot of money in gold because gold loves, like I said, falling nominal and real interest rates. So, and maybe even sector 5, gold should do fantastic. And I think because real rates, even though rates will be rising, nominal rates will be rising, in real terms, they should be lagging inflation. So, and if that's the case, that's the actual best environment for gold.
MichaelPento explains that nations have realized they cannot safely park their currency reserves in US dollars due to the risk of confiscation. Rather than investing in dollars and treasuries, which may be subject to tariffs, they choose to use their trade surplus to buy gold and hold it themselves. As the US dollar gains ground against a basket of other currencies, gold prices generally decline because a stronger dollar makes gold more expensive for those holding other currencies, reducing demand. However, gold prices have been behaving unusually, hovering near record highs. This scenario tests an investor's tolerance for risk and highlights a growing preference for gold over the dollar. Pento emphasizes that this shift is no longer a mere theory, but has become a reality in recent years. What was once speculative is now a clear trend. Countries increasingly diversify their reserves away from US dollar assets and turn to gold to safeguard their wealth and sovereignty. Let's get back to the video.
The empty money supply. So it's domestic money supply. So
Okay.
you have swap agreements, but then we exchange dollars and they give us money. But $6 trillion is the number that I'm focused on. It's never happened before. We have never had a $6 trillion. And by the way, from 1913 to 2007, the Fed's balance sheet. So this is the creation of the Federal Reserve from 1913 to 2000 and the end of 2007. It was $800 billion. That was high-powered money. This is the reserves in the banking system. This is part of the base money supply, which is, so it's Fed credit plus physical coins and currency in circulation, $800 billion. And from 2008 to 2022, so 14 years, it went from $800 billion to $9 trillion. And that's Banana Republic style, man. That's just disgusting. And you think about the $6 trillion in helicopter money that was handed out, $5 trillion of that, like I said, was printed. It's just nonsense how we've financialized our economy. And there's a price to be paid. The price to be paid was inflation and the destruction of the middle class. That price has already been paid for, or it's being paid for right now. Kai, we have to prosecute that fight. We have to vanquish inflation, in my opinion, to get back to some kind of normalcy. And it will entail an asset bubble crash. I think the US dollar, and I'm not just talking about so much against other flawed fiat currencies, because that's not how you measure a currency. You measure a currency against gold. You want to look at a chart, put up the Japanese yen against gold up until a few weeks ago. I think the dollar crashes against the price of gold. Crashes. It's been doing so, and I think that could accelerate after the recession. And if I'm correct, and the Fed and Treasury blink and say that the money markets are frozen, you can't float commercial paper, there's no transactions in the repo market, they're dysfunctional if there's any at all, and we have to launch some kind of ZERP, QE, and helicopter money regime once again, I think the dollar crashes, especially against hard assets. Other nations have made the calculation that I cannot park my reserves, my currency reserves in US dollars, because they can be confiscated. Like I said, confiscation. So in that scenario, what I would rather do is take my excess, my trade surplus, instead of buying dollars and buying treasuries, which can be subject to tariffs, I'll just buy gold with it and hold the gold myself. And then I obviate the ability of the U.S. to sanction me. That's what's happening. That's not a theory of mine. It was a theory of mine years ago, and now it's a fact. It's just happening.
As the global economy faces uncertainty and changing monetary policies, gold's potential to reach $6,000 becomes more plausible. With increasing doubts about the stability of the US dollar and rising geopolitical tensions, demand for safe haven assets like gold is growing. If these trends persist, gold could set new records and solidify its role as a crucial asset for preserving wealth amidst a weakening dollar. What do you think will influence gold prices more? The Federal Reserve's decisions or the stability of the US dollar? Share your thoughts in the comments below. We'd love to hear from you. If you found this video informative, be sure to like, subscribe, and share it with friends and family. Thanks for watching.